And right now, nobody has a clue as to where it's really going to settle out.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. I'm joined once again by David Kruse, the founder of Comstock Investments. And recently we talked about the 2024 crop growing season and some of the numbers that came out of USDA and how they impacted the markets over the course of the last half of 2024 and heading into 2025. David, now that we rolled the calendar over, now we're having to look forward to new crop. We're having to look at acreage potential, the possibility of tariffs. We don't know what's going to happen there. And just a whole new market dynamic that could be set up for this year. And I want to get your take on that, how farmers need to kind of be in the right mindset to handle all these landmines, I call them, for 2025, and just how to make sure that you can kind of protect your bottom line. This could be a challenge.
Well, I guess we're anticipating with the USDA's next forecast. They have their outlook meeting in February, and they will be coming with their new outlook for revised balance sheets in the year going forward. Last year we started out with them projecting, something like a 2 billion bushel carryover. This year they should be there. They ended up in January at 1.5. They were projecting last year was it's important whether a carryover is increasing from year to year or decreasing from year to year. And their initial forecast last year was that our corn carryover and soybeans would increase from year to year. But when we got all said and done with when the final yields were run through the combine and when actual demand had unfolded, we ended up with a year-to-year decline in corn carryover. That was extremely important and so that resets us going forward to a different situation than a year ago, where at least in the case of corn, they're probably going to project, I imagine, that the carryover will increase, but from a much lower level. There's no cushion in that 1.5 billion bushels. There was a cushion in the 2 billion. And that was why last year we didn't see the market respond very aggressively to weather conditions. I think weather will be a much greater factor in 2025 as far as the market response to weather changes because of that tightened carryover. We've still got to get through South America's crop. It's hard to build still a bullish case for soybeans. It's not so hard to think that corn can have much larger price parameters than it had last year. I don't like to throw out numbers, and it's not a forecast, but it is possible to even see a 6 on a weather rally this next summer when you're starting from 1.5 billion bushel corn carryover. That wasn't going to happen last year. That was out of the question, from that standpoint. So we'll see where the USDA starts with, and so we'll have to reset our expectations, relative to that going forward. South America has had a pretty normal La Nina crop situation. Usually in a La Nina year, the Argentina will see some dry conditions, southern Brazil some dry conditions, but the bulk of Brazil performs very well, and the net is fine. It's still a normal, good production. And so we're not looking for a big bull market from what happens from here on, probably from South America. They may trim it slightly, but not a great deal. Harvest starts there now. Actually, next month is their critical month for their soybean crop, just like ours is August. And so it's not in the bin yet. But right now the forecasts are pretty good for most of Brazil. On that side of it.
A lot of analysts are maybe projecting 95 million acres here in the U.S. this year for corn. How do you feel about that?
Well, that could happen. It could happen, but it happens mostly because the alternatives are so bad. Cotton producers are in horrible shape. They haven't even come close to break-evens or projections, and that industry is shedding acres. You can't make any money on soybeans anywhere, as far as I'm concerned. And so even though the new crop price of corn is really only offering close to a break-even for next year, everything else loses money. And so then there's other aspects to it. We're still in relatively dry conditions in a lot of places. We're looking at that. Corn takes more water. I know some people in Texas that would normally start planting next month, and they say they're not going to plant corn. They're just, the irrigation's too expensive, water allotments are down, and their basis is not good, and they look at new crop price and it doesn't work, and so they're going to try something different. Nobody really made any money last year, and so farm finances have tightened. Corn takes more cost of production than other crops, and so if you're trying to get by on the expense side, that probably maybe cuts into the corn just a little bit. Where we are here in Northwest and Iowa, Minnesota, we're going to see, I think, a significant increase in corn acreage. We have a tighter balance sheet in our region than what the USDA projects for the country. There's a real dichotomy between the eastern and western corn belts as far as basis. And so, we expect, premium basis too. And so, with a good basis, we would be looking at some marginal profitability in the western corn belt. And I think that that we'll see some basis improvement as we get closer to harvest here, but time will tell. I think we can handle a couple million acre increase in corn acres. If we start going to this number that you mentioned or whatever, then it starts to get maybe negative again for that projection. Or it'll be at least more focused on the weather. If at the same time, because it's not in the bin until it is. I also would point out a longtime friend or acquaintance, Dr. Irwin Taylor, has predicted 2025 to be the target year for the 89-year drought cycle. And as we look at the conditions as they're setting up at the beginning of 2025, there's nothing to suggest that that can't happen at this point. Our subsoil general moisture levels are not great, and we realize it's winter. Some spring rains can change things, but good time to have a drought in the winter. But overall, if that would happen again, we can have some weather rallies. In other words, what I'm basically saying is I think there will be some weather marketing opportunities this year that did not happen in 2024. Every time anything, they just ignored any agronomic adversity last year. I don't think they're going to be able to get away with that in 2025.
With the Trump mantra, drill, baby, drill, and he wants to really rev up, I guess you could say, the energy industry, crude oil industry, natural gas, and that sort of thing here in the country. If they really do increase oil production here in the U.S., would that have kind of a non-stated benefit of increasing ethanol demand? Because you would also, I guess almost out of necessity, have to have more ethanol to blend with all that extra oil, wouldn't you?
What you're suggesting is that oil companies will increase production when they lose money. These levels that he's talking about, $50 barrel oil, they can't make any money at that. So why are they going to go out and produce all this extra production and take it to these astronomical levels? You're going to have to form a cartel with the Saudis or something, so they're going to cut their production, and good luck at negotiating that with OPEC and such. You can say drill, baby, drill. You can remove all the impediments, the physical ones, the regulatory ones, toward expanding oil production, but the market will still determine how much is produced. It will not happen because the president says so. Unless, I don't think we're going to throw taxpayer money into that. It's a mantra, it's a political statement, drill, baby, drill. I think if we're going to do that, also common sense would be is that biofuel would play a part in it. It's just ridiculous at this point that we do not have year-round E15 approval for all the states in this country. It benefits consumers. It's a lower price. It's like 400 million bushels. 1% increase in our ethanol ratio is like adds up to be 400 million bushels of demand. I'm talking about where are you going to get large-scale demand increase? Well, that's the first place and the easiest place to go. Even in what they've said so far at the beginning of their administration, they still haven't come full out about the year-round use everywhere. They talks about year-round use, but what is it, 8 states right now? And he wants to do waivers for that. But I've never heard anybody explicitly say that they were going to do that. That was supposed to be done legislatively. Maybe it'll get put in this big bill that's coming up. It got left out. They had 3 tries at the last last time when Congress did this in the lame duck session, and year-round E15 everywhere was in the first 2 versions. And when Johnson figured he got the vote, he took it out. It was him that took it out. He's Louisiana Oil and Gas, Speaker Johnson. I've been to Washington. I've talked to some of our congressmen, and they think it's going to come. And that's the first thing that should happen. Then beyond that, we need to lower the carbon score of ethanol. And that is where we're going to see the kind of scale of demand that we need to have in the future. In my timeline right now, we're close to 3 years away from that, from getting pipelines and the sequestration and stuff that makes that all happen. It's getting drug out. There's been opposition, local and otherwise, and that's a problem, particularly in South Dakota is the problem right now, and it'll take a while probably to work through that.
You were in D.C. I know you had discussions about sustainable aviation fuel.
Yeah.
And the need to get the 45Z regulations actually published and out there. Where are we in that regard right now?
I don't think we have a transparent conclusion yet, but again, they're optimistic. They came with a real half-hearted part-way deal again at the end of the Biden administration that really got us nowhere. And so they're hoping by April, I think, that we can see a more transparent situation from the Trump administration. Let's hope that we can on that side. But that's where your bigger demand's going to come from as we move forward. And of course, we mentioned tariffs in the beginning, and we don't know where the tariff thing is going to take us. We've seen, Trump threaten tariffs on countries that he says steal from us. And essentially that he equates to us having a negative balance of trade. We're buying more from them than they are from us. But then we also see Colombia. Colombia buys more from us than we buy from them. And they got a tariff threat off of the deportation riff here that came and went pretty quickly. But if anything, using Trump's logic on who's stealing from who, Colombia should put tariffs on us. Not going to happen. And so that they've got to straightened out. The ones that we're talking about putting on some 25% tariffs on major export buyers. I think as soon as I don't know when this will air, but at the end of this month, this is January yet. But there's also talk of ramping it up slowly. I know the new Treasury Secretary is talking about starting out at 2.5% a month, and then essentially asking for some types of concessions. And concessions can appear to be about anything. It doesn't have to be about trade. Just how they handle the immigration situation, or whether or not Denmark lets us have Greenland, or it can be almost anything. They're a multi-purpose tool now. And then also to the point where the president, he wants lower taxes, and he'd like really to eliminate the income tax. Goes back and alludes back to before 1913. We got our money from tariffs. And so if we just charge the whole world 60% or 80% or 100% or whatever it is tariffs, they can finance our entire country. And we don't have to pay taxes. And so, it goes just all over the board. And right now, nobody has a clue as to where it's really going to settle out. All we've seen is the initial reactions to the tariff threats have been for our primary end users to build inventories. China is sitting on a 65% stocks to use ratio. We're normally closer to 10. They've got, if you believe their numbers, first of all, but it makes sense from a standpoint that's a very defensive, protective position to be in, is to have large stocks of corn, so you're not so threatened to a tariff situation. Although that their relationships with Brazil continue to develop. They are financing the building of a road across Brazil from east to west through Peru to a port there, so that they don't even have to use the Panama Canal. They can truck all the way to that port from Brazil, and then that will lower their costs and stuff, and basically continues to line. So we got a lot of things on trade coming up here, but I don't think at this date anybody really knows how it's going to settle out.
One thing we haven't touched on, and I want to bring that up before I let you go here. Is it possible no one cares about wheat anymore? Wheat's like the poor stepchild or something. That it totally gets ignored. The market is dragging the bottom of the barrel, has been for quite some time. But it sounds like Russia has been having some issues. Maybe only a third of their crop is in good condition. I just wondered if you think wheat could actually be a dark horse commodity here this year in 2025.
I suppose it could have, but usually anytime you think something like that, you end up being wrong about wheat. But the thing about wheat is it's grown everywhere. I mean, there's so many countries that grow wheat, and it's hard to have enough of a weather impact, enough places. It's also grown all year round someplace. To really tighten that up. And it has been Russia's been the dominant mover in the export market. They've captivated that to a certain extent. So when things happen in Russia, people look at that. It's hard to predict that there's going to be a shortage of wheat at this time from anything still that we see today. If they settle the war in Ukraine this year, which is also a possibility, then Ukraine production starts to recover. And so if they get it down, it'll be hard to keep it down. Put it that way on the production side. So
well, it's interesting stuff. You bring up some really intriguing points, and I can't wait to see what 2025 shapes up to be like when it comes to a production side, the weather side, regulation side, tax side, and all that.
weather.
So it could be a real hornet's nest out there. But anyway, I appreciate you taking a little time to chat with us today.
Well, we've heard Dr. Taylor for years and years. He would precede me in Outlook meetings or follow me. And he has talked about 2025, it seems like probably for a couple of decades, projecting out that this is when this peak year would be. And so I'm glad I lived to 2025 to be able to see it now and experience it. But it's something that we'll watch carefully here. And at least what I'm suggesting is that differing from 2024, the market carryover situation, demand situation are now in a much improved condition to be able to respond to that in weather.
And just to add on top of that, a little extra intrigue, the grand solar maximum is now
Yes.
starting to get behind us, and the solar magnetic poles have flipped like they do every 11 years, and that usually means a change in overall weather patterns. So things are kind of lining up.
There's some that look that the increased cycle time for solar flares. And I think we had one actually a year ago. It was a small one that did for a short period of time interrupt the GPS signals. There was a day or so when actually farmers were trying to plant and couldn't get a GPS signal, and that what many are predicting is that there's a bigger one coming here, and as far as the cycle is concerned, that could have far more impact on that sort of thing, disrupt our electronics and satellites and the whole systems. And as dependent as we've become on GPS, it's something to take note of, and maybe getting rid of the planter markers wasn't maybe the best thing in the world. Who knows?
That's a great point too. All righty. Well, David, thank you again for the time. David Kruse, founder of Comstock Investments, with us, and I hope you enjoyed it. Thank you so much for joining us. I appreciate it. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.